Hey guys, Sarah Berry, CPA from Texarkana, Texas. Today is Sunday, August the 30th, and I'm doing this short video to talk about the payroll tax deferral that President Trump signed as an executive order on August the 8th. And so I've received lots of questions from you guys as small business employers asking, we think it kicks in on September the 1st. Do I need to stop withholding Social Security on September 1st? So our answer to this point has been, we don't know. We have received zero guidance from the IRS. Well, Friday, August 28th, the IRS come out with some form of limited guidance to us. So I'm going to briefly scroll through this and kind of explain where I come up with my conclusions, my interpretations, and then go through some Q&As with you at the end. So here is the IRS guidance, and you can see here, according to this language, it says, according to the Secretary has determined that employers that are required to withhold and pay the employee share of Social Security tax, blah, 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 and then it says, in parentheses, affected taxpayers. Okay, so they are calling the employers the affected taxpayers. That is important because later on in this guidance, they say that the affected taxpayers are responsible for paying this tax back. Okay, when are we responsible for paying it back? Between January 1 of 2021 and April 30th of 2021. So in effect, this applies to wages earned from September 1, which is Tuesday, through December 31st. So wages earned during these times, you would not have to collect Social Security from your employees' checks, so they would in effect be getting a pay raise. You wouldn't have to withhold the 6.2% and pay it into the IRS. Now, what's the applicable wages this applies to? No more than $104,000 annual salary. And we'll dive off into that in just a little bit. When do you have to pay it back? So if you stop withholding Social Security from your employees' checks from now through the end of the year, it's not just a pay raise and they don't have to pay it back. Yes, they do have to pay it back. You will start withholding that payback of that short-term loan. The deferral of payroll taxes has to be paid back on paychecks earned or paid between January 1 of 2021 through April 30th of 2021. Now, it would be withheld evenly over that period of time. So as you can see, this would be a burden on the small business, the employers, to stop the withholdings on the employees that wanted to do that, and then get that total for that employee, and then look at the wages earned between January 1 and April 30th of 2021 and divide that out evenly. So during that period of time, you would be withholding the normal 6.2% Social Security tax, plus you would be withholding this Social Security tax that they defer during that period of time. Now, then it talks about the payment of the deferred applicable taxes being paid back on paychecks paid between January 1, 2021 and April 30th of 2021. Now, if it's not paid back by May 1st, it would be subjected to interest and penalties in addition to the tax. Now, it says the affected taxpayer may make additional arrangements to collect the applicable taxes. So in effect, they're saying that if the employee elects not to have Social Security tax withheld from their checks, it is the affected taxpayer, the employer, that has to pay these back. All right, so this is my interpretation, my summary here. Now, again, I have to add this clarification. This is my opinion, my professional opinion. Others may have different opinions, and it's just that. It is an opinion. It's not official legal guidance to you. Okay, so Q&As. If an employer chooses not to withhold Social Security on wages earned from September 1 of 2020 through 12/31 of 2020, they are supposed to collect those taxes back from the employee from January 1 to 4/30 to April 30th of 2021, or they will have to pay penalties and interest. What if the employee quits their job with the employer prior to having these paid back? or they're fired. If the employee quits or they're fired before they pay these taxes back, who is liable for the payment of these taxes? You are, the employer. You don't want to incur any additional taxes, I don't believe, but you would be liable for these taxes. Do you have to stop withholding these Social Security taxes on your employees' checks? No. According to my research, the IRS website, this is the only thing we've seen from the IRS. We've seen nothing that says that the employer has to stop withholding these taxes from their employees' checks. How much money are we talking about? So I'm a person that is, let's get to the bottom line. Is this really material or not? Is this really a big payroll tax break? Okay, so at the most, if someone is making $104,000 a year, that is the max that they can make and still be eligible for this payroll tax deferral. If they're making $104,000 a year, this payroll tax deferral would be $1,612. They would get a pay increase spread out over how many paychecks between September 1 through the end of the year, and then they have to pay it back next year. So is this really worth it? Not in my opinion. Now, where did I get the $1,612? Well, it's $4,000 gross wages per biweekly paycheck. That's $104 annual salary. You take that, divide that out over each month. It's 4 months of wages, so 26,000 gross wages at the 6.2% Social Security rate. That's $1,612. Now, should you offer your employees the option to stop withholding this tax? No, is my opinion. You should not. If you choose to, that's your business. If you're a client of mine, please call me before you do that. But if you stop withholding the Social Security taxes from your employees' checks, your business is on the hook to pay those taxes back in the event that the employee does not pay them back. So, this is my official guidance to you guys. Have a blessed weekend. Talk to you later.